Morning, everybody. Monday morning, 8th of February. We're Signal Centre talking ball. I'm Joe Neighbour, joined by Ian Coleman and Steve O'Hare. Good morning, guys.
Morning, everyone.
Both all right?
Yeah,
both
good. All good.
Much snow?
Yeah, there's a lot out there. It looks nice. It's very pretty.
Very slippery.
We got a bit more this morning, actually.
Did you?
Yeah. Loads on.
We've got it still coming down now.
Yeah.
Loads on Friday, then Saturday and Sunday. It looked like it was just going to disappear, and then woke up this morning and there's loads more.
Yes, pretty much the same here, I think, except for a cold week. That's probably pretty much the only thing going on this week. By the looks of things, it's going to be quite a quiet one on the news front, and there hasn't been an awful lot of news over the weekend, unless Steve, you want to talk about football? Do you?
No, not. Well, it's a bit cold to talk about football, isn't it?
Okay,
I think that's the problem yesterday as well. The goalkeeper had nothing to do, and it was cold. Klopp confirmed it afterwards. His feet were cold when he's sort of like passing out from the back. So
he is Brazilian as well, isn't he? So he's probably not used to that.
Yeah, exactly. Yeah, see. So we sort of we can swiftly move on from that.
Yeah, all right, fine.
No point in talking about it.
No, won't dwell. Okay. The only news I saw that was maybe a little bit concerning was about the AstraZeneca COVID-19 vaccine showing limited efficacy against the mild variant from South Africa. Saying protection against severe illness hasn't yet been determined. Financial Times have published a story today. Work is underway to adapt the shot to a new version, which is not likely to be available until the autumn.
But that's only done on a few people, wasn't it? It's only was it 2,000 people or something?
Okay.
I mean, a lot of people.
Size, isn't it?
Yeah. Well, not really, because a lot of people are getting their first shot, and it takes a while to build up the immunity, and they're getting it anyway. Yes. Yeah. Well, at least, and I know. A nurse locally that sort of got her shot, and a couple of weeks later she sort of like got coronavirus. So it's
really?
Yeah, but so it's everyone's thinking it's a quick cure, but it's not. It's a sort of long-term thing, and I think obviously me being a conspiracist, that probably the drug companies are going to take advantage of this and say, oh yeah, we need to adjust it a bit. That's an extra £1 million,
and then they chuck the chip in on the next one.
Yeah, exactly. They'll sort of like sneak a few bits in. So I think that's sort of like just a story to try and grab headlines. To be honest, I don't know enough about it.
It's a worry, though.
I'm not a doctor, but
you might just keep on getting different variants, though.
Yeah, again,
that's what happens, though, isn't it? These things do evolve, don't they?
Mutate.
Yeah, exactly.
I mean, you have a basic immunity to it, won't we, all of us, after all this, you would have thought?
Yes, we will. It's like, any sort of like jab we get, yellow fever, typhoid, whatever it is, they don't keep adjusting that, do they? I'm sure there's different variants of that, but it sort of like seems to do the job, or it's sort of like you don't need it really.
No.
Again, we look at the sort of percentage of the population who've sort of like are suffering critically, and it seems that everyone's talking about these things as though sort of like the whole world is dying of it, and it's not the case. So, a bit frustrating really when you sort of look with these news headlines and just drama being created and panic being created when there's not enough data there to sort of like start that.
No. Well, moving on from COVID, because we're obviously all very bored about that. On the economic front in the US, there was a disappointing jobs number on Friday. It failed to impress, and it did provide Congress with a timely reminder that it needs to act fast and act big on their stimulus. So maybe that'll give it a bit of a kickstart.
So the stock markets must have crashed on the back of that, yeah?
Oh, of course.
No. No, the quick answer.
Well, that's a good segue into what you're going to show us, hopefully. Give us a rundown on what's going on in the equity markets. You need to share your screen, Steve, as well.
Yes. Here we go. Share screen. Oh, not that one. Jesus, I'll get arrested. That one.
There we go.
Just a quick run through again. I like on the Mondays to sort of like really have a little bit more of a look at the longer term picture. The weekly chart was a very positive week for FTSE last week. Obviously, we've got this bullish momentum waning and potential for a crossover. So he did make a new low well, it's the lowest we've got over the last 5 weeks or 6 weeks. Last week, so that sort of like retested the 63.11 level, which we had a swing low towards, and we got down to 63.04, just lower than that, and then it rallied. So on the week it was mildly negative, but had a bit of a kick in the teeth for anyone who got carried away with the idea that the stock in the market going lower. DAX, on the other hand, formed a bullish outside candle, which is very positive. And this week we've actually made a higher high, all-time high. If I won't bother squeezing the chart in, but it's pretty much an all-time high as far as we're concerned in this present day and age. The CAC still has a way to go to reach its that pinnacle, but it did form a bullish outside candle on the weekly chart. Again, you can see this bearish momentum, or the MACD, the moving average convergence divergence, slowing down, and while prices are going up. But it's pretty steady. If we see the peak here, I wouldn't be too concerned about it. It can still go higher, so just wouldn't rely on one indicator. But yeah, I think the target in the CAC is 57.27. We're only 50 ticks below that, and there's potential for a retest of that all-time high. So Dow, bullish outside candle, all-time highs, 31,300. NASDAQ, don't be ridiculous, it hasn't come off. It actually touched the bottom of that channel, which we've redrawn, and looks really positive still. It'll be, I think, the sort of like the rally high will be this sort of grinding motion. So it'd be quite, boring for the sort of like the intraday traders who like to see these big moves that they don't feel like they're going to happen. Like Joe said, there's not a lot out this week, so it'd just be a bit of a grind higher. Maybe sort of like tomorrow we might get a sort of like the bears come in and the sellers come in and sort of like try and see if they can get anything going on the downside. But I think they're sort of like wasting their time. S&P, we're getting close to a big round number, and everyone likes big round numbers, even the algos and the computers. They all sort of probably have this 4,000 level in their sights, which is really sort of strange, because I feel like it wasn't long ago we were talking about 3,000. So yeah, bullish outside candle again, no stopping it, and a new all-time high today. So only 100 points away. That's a couple of sessions maybe in a sort of busy period for the S&Ps, but really for a 100-tick move, I would say that's probably about a week. Let me see the ATR in this bad boy. Yeah, so about 127 ticks on average a week it moves. So that would line up the 4,000 at some point this week, unless we get a bit of a sell-off, and then it may sort of like slow it down a little bit, but it looks like it's heading that way. And I wouldn't say that's the end of it either. Just because it's 4,000 big round number doesn't mean to say that'll stop there. It'll probably have a pause based on sort of like what we see in technical analysis, and maybe a sort of like minor sell-off, but no real reason why these indices are going to slow down based on what all the worldwide banks and the worldwide governments are doing. Popping across to gold, I'm sort of like more inclined to look at this. It's very hard to manipulate this market, so unlucky. Gold 1808 trading. We've watched this. This is the only chart really I'd like to sort of like pop down to the daily. This flag formation has broken out. We've had a bit of a retest of the previous upward trending support of the flag. Around about 1820 for me is a little bit of a nervous area for shorts. I still think we're heading down towards this 1765. I know the measured move target I've got in is a little bit lower than that. Potentially we could go lower, but I think we have to have a little bit of time below the 1800, testing that support level before we go higher. And we do really, if we look back, there's obviously a good congestion levels around here. So support all the way down in gold, and I think at this point in time we just have to focus on the look at the 4-hour chart. We just have to focus on selling into rallies really. Ian can tell us about what the dollar's doing. I presume the dollar's sort of like holding up a little bit at the moment.
Yeah,
and
this morning
maybe has
anyway.
potential for a bit further.
Inverse head and shoulders.
Yes, the inverse head and shoulders in the dollar index will be nice to look at this morning. Crude oil, no stopping that bad boy. We're looking at
1-year highs this morning, wasn't it?
Yeah, I'm looking. I think we mentioned before the target for me really is the $60 to $61 level. That'll be that's a measured move target from the AB equals CD formation from the drop to the horrible lows we suffered last year around April. So that 61 target in there. The Brent was a bit higher. I think that was a $68, $69 target. So yeah, that's it for me. Silver, obviously last week we did have a sort of that real sort of like meme stock type rally, which didn't last because obviously silver's a much more difficult market to manipulate than GME or something like that. So you're sort of taking on the sort of like the producers, the refiners, everyone in, you know, the whole world. If you take on silver or gold or one of the them sort of precious metals. So it's not as easy as that, boys.
Okay. Thanks, Steve. Ian, over to you. I'm seeing a couple of nice technical patterns on dollar index and euro dollar this morning. What do you reckon?
Go on, then you can show your charts first, then.
Oh, okay.
Oh, you're calling him out there. He didn't see anything. He hadn't done nothing.
No,
nothing,
exactly.
mate.
Oh, here goes. He's
I've had my PC off all weekend, so I'd like to see what you've got.
Well, that's my head and shoulders on euro dollar.
Like it.
And we've seen a lovely retest of that over the last few hours or so.
He's got his trade of the day up already.
Perfect, really. Measured move of that is down here at 117.53. It's also a 78.6% fib retracement level of this low from the 3rd of November to the highs that we saw in early January. So nice bit of confluence down there. Really like that. And seeing the similar sort of things, or the inverse of that on the dollar index. So the inverse head and shoulders here. The retest over the last few hours, nice little pick up. In terms of the measured move there, that's 92.65, which is also pretty much a 61.8% fib retracement level from the highs on the 25th of September, again down to those lows that we saw in January. So that's what I'm seeing on those two markets.
Lovely. I'll go back to bed. I could have done with it this morning as well.
I'm keen still to see your take on it. Anyway.
I'm skipping past the dollar index and euro dollar now, and you've made my job a lot easier.
Was you going?
I'm just going to go straight.
Did you?
No, I was just going to go straight to cable.
I'm agreeing. It's a bit different, isn't it? It's a bit of a different animal at the moment.
Well, we've got this wedge breakout. This is the 8-hour chart, and with Joe's dollar bias, so dollar to the upside, sterling dollar to the downside, and we've had a nice retest, and this is 8 hours. Look like we're going to get a bearish engulfing candle, which is pretty negative. If we swing all the way back to Friday, we mentioned this, and I said if this is going to hold as a BC leg, then 88.6% is the daddy-o, which comes in at 137.37, bearish outside candle on the 4-hour chart at that level, offering really good risk reward. Stop above here, target down here for the Gartley, not Gartley, it's Butterfly, which is 127.2 and 161.8%. So that positive dollar bias is looking very good. Dollar Swiss, again, that was just if we go to a bigger time frame. We mentioned this on last week as well. We basically said we've got this confluence area here. It did stick its head above it, but this is now looking just like a small fourth wave correction, I think. So as far as Elliott wave is concerned, 1, 2, channel, breakout, impulsive, up to 161.8%, and then a pullback to rally, I think. Got another confluence area up here at 91.44.
That's a lovely inverse head and shoulders. That's a really good example of one. Yeah, just
left shoulder, head, right shoulder,
and the measured move. You know, it's like that's what you sort of like look for. Well, that's what I love looking for.
Your dreams are made of.
Yeah, wet dreams. That is.
There you go. We've got a measured move.
Yeah, a bit more up to the 78.6 or something.
Yeah. Dollar yen. It was quite weird on Friday, I thought, because even we've got quite choppy price action, didn't we, over the figures, and then we posted this lovely evening doji star formation, and then we got back to the swing low, and just this is near the close of the session, and it just stalled, and then obviously stock indices have opened up slightly higher this morning, and we're pushing up. So at the moment, sort of no man's land. I'd look at the range really. If it breaks this low, then this is just a little mild free wave correction. One thing that I did see this morning, which was on stock indices, thought was quite interesting, was obviously previous swing high here. That's not the previous swing high. It comes in at 31237. Got a doji style candle, but then I thought this was quite interesting. This was a report that we did last week, which is that channel, but again it's lining up quite well. 1, 2 up, consolidation, fourth wave, and then up in 5. But there's no reversal candle formations up here, so I think you really need to see a better turnover to potentially get short of stock indices. But obviously, if stocks do move to the downside, then that gives that dollar index a bit more of a boost and gives these formations more chance of breaking out. This was my trade of the day from Friday. So that was the non-farm payroll spike, and then it's moved lower again. I think with dollar CAD being dominated by oil, I'd still look at buying dips, but I wouldn't look at them to buy dips until around this sort of level 127, the figure, which is a 61.8% pullback level and a potential right shoulder. And again, it's when you looked at cable, when you looked at euro dollar, you had those nice reversal candle formations, and here we're just really sort of tracking sideways overnight. So like I said, I think that's going to be dominated by oil as opposed to the dollar index at the moment. Aussie dollar, and again I think we've got to remember the big picture. Big picture looks like we've completed 5 waves to the upside, but again this sort of move lower is anything but impulsive, and it actually looks like a bit of an expanding wedge formation. Aussie dollar, Aussie yen have a tendency to track stock indices, and again, this doesn't really sort of make you want to sell stocks. You can't say that this is any sort of real decent reversal candle formation. And I think we probably, if we're going to follow fibs, then we're probably going to break this to the upside. The measured move target, obviously on a breakout of the wedge formation, which is here at 77.30, is the start of the wedge, which is up here at 78.20. This small pullback is of 38.2%, means that it can extend all the way up here to 78.72. So again, I think if you got a small reversal down towards 76.52, which is a previous swing high, that's worth a long, I think, to take us up to new highs and flush out a few weak shorts basically. Euro sterling, big picture still looks shite, doesn't it? It's that 8-hour chart, but we have seen a bit of a bounce off the 61.8% fib. This is on a daily chart, but really the sort of confluence zone is all the way down here, which is at 85.66, 85.35. So again, sort of selling into rallies. If we close in on that chart a bit, I think you're getting up towards a Mariposa level, but I think this previous swing low, which comes in around about 87.92, will probably cap any intraday rallies. Euro yen, again, really sort of struggling to get anything on this big picture wise. These are potential counts, which means sort of buying dips up towards sort of 128.62. Intraday charts, even though we've hit a 78.6% fib this morning, we had a little correction lower. This impulsive move to the upside, I think, will tempt people into still buying dips in euro yen at the moment. And I think that level up here, just again to wash out some weak shorts, is probably the target for traders. That's me done.
Okay. Thanks, mate. Steve, is there something you wanted to show there? I saw you looking at something on the screen.
Yeah, one of the I just saw a chart from Reuters Icon. So shout out to them, Refinitiv Icon. It's copper prices really, and there's a little bit more I want to add to just what they've sort of like put out. This is the LME copper price. It's different to the price that we track. We track a different exchange, the more sort of the one that most people will look at. But this is a different weight. This is US dollars per ton, whereas we look at a metric side of things. There's the bat phone. Oh, I've got to stop talking about copper, apparently. No, call it copper. So this is looking at it over since 2005, so that's a 16-year chart, and it's talking about the 3-month copper hovers near highest since 2013, and LME copper stocks near lowest since 2006. So the stocks are low, the price is high, and also we've got this basically potential, and everyone talking about it. I suppose with the US stimulus package potentially sort of like nudged forward based on the sort of the non-farm payroll figures. It's, you know, the recovery needs to be boosted, so more stimulus would mean greater demand for these sort of metals. So just really thinking about, you know, potentially where copper could go. And if you look at the weekly chart, we talked about copper previously, and we talked about, I sort of brought up this double bottom pattern which broke the neckline. So I can tell you when we were talking about it back in November, December, and it seems to have sort of like just held here, waiting for the next reaction higher. Obviously, this chart doesn't go all the way back to 2005, unfortunately. So if we sort of have a measured move target, we're looking for a move up towards the $5 level. 470, I think it comes in the measured move target. So plenty of upside for copper, and I suppose it's all based on the demand for it picking up. When the stocks are low, the price is already elevated, then it could cause a bit of a bull run at some point. Obviously, we look at the MACD, and the average range is now sort of $13–14 a day from the sort of like a norm of about 8 to 10. There's still good potential on the upside for that.
Cool.
Lovely.
Okay, so gun to the head trades from last week. It was fairly muted, given that obviously we did have non-farm payrolls. Ian, as you mentioned, you were stopped on your trade on the back of that.
I don't think you did mention that. I think you just mentioned it.
I think Ian
yeah,
talked about it. I was listening to you.
All right, no, I was looking at copper. Sorry, call it copper.
Steve, you had a 0.16R return on Bitcoin, which it's quite amazing given the volatility on that thing that you managed.
Yeah, I was gutted. I thought we ran that for 24 hours. 24 hours later, it did hit the target.
Oh, did it?
Yeah, really
Classic.
annoyed. Yeah.
And silver was 0.21R to the good at 9 o'clock. So not much to speak about. Continues to be quite flat on the performance. So who's got an idea today? I've kind of given an indication of what I'm looking at already. Have you
I've
got
copied
something?
yours, Joe. No.
Go on then. What you got?
No, I haven't copied yours really. I was tempted. Looking really at gold again. I think short term, intraday, the 1820 level is important. Well, we've got, what's the price here? Let's be a bit more specific. 1818.88 is quite important. So at 1820 for me is a sort of like previous support as well, and a nice rounder number. So we're just trading around 1810. We've had this sort of correction back higher from 1785. I don't believe this gold sell-off is over, and obviously the dollar index looks pretty tasty. So I think we could sort of like have a little go at this. I'm getting short at 1810.75. My stop will be at 1820.75, and my target will be at 1785.75. Although obviously the measured move, or the real move I'm looking for, is down to 1765. So that'll be my first take profit target here.
Cool.
Lovely.
Best of luck. Ian, have you got one?
I'm looking at Aussie Swiss on the off chance that we get a turn lower in stock indices. Obviously, very similar to Aussie yen, as in the Swiss side is the risk on, risk off product. So I'm going to get short at 69.03. Stop at 69.17 with a target down here at 68.02. Give me 7R.
Oh, nice one.
I hope so.
Okay, I'm going to take a look at euro dollar. As I mentioned, that's one I favour out of the two that I looked at earlier. Nice little retest of this neckline. I've just get that back up. So this is the 4-hour chart. Zooming in for an entry on the hour. Let's have a look. I'm going to sell it now at 120.29. Stop loss above the recent high, so quite tight. 20.56, 26 ticks. Measured move of the head and shoulders, I've got down here at 117.60, so pretty enormous. Whether or not that'll play out today, I think it's probably highly unlikely, but you've got to be in it to win it. So I'll have a go and see what happens. Looking for 10R on that.
Wow,
nice one. Good luck with that.
I mean, might have to stay on that for the next few days and just keep banging the drum if it keeps looking nice. We'll see.
That's the thing. Ideally, I'd like to sell it when it gets to 18.20, or just have a look at the action there and then sell it. But cunt ahead, babe.
Yep,
Can't
exactly. Okay, so those are the three trades for today. In terms of news, there's really not a lot out today or for the rest of the week, actually. We've got Eurozone investor confidence reading out as the only big kind of data release of note today. But beyond that, there's not very much going on. I think it'll be all eyes on the US stimulus package. Wait and see if that gets approved. Anything else you're seeing on the calendar, Ian?
No, nothing at all.
Okay.
Very boring.
Let's see what happens then. All right then, guys. Well, let's wrap it up there. Have a good day, everyone, and we'll be back tomorrow morning.
Yeah,
Cheers.
Enjoy.
Yeah.
Cheers. Bye.